Good afternoon or good evening, depending on where you are located in the world today. Welcome to the How to Make Money Trading Stocks webinar with the active trend traders. Join us from Zurich, Switzerland, Michael Bishop. Michael, welcome, my friend.
Hello, nice having me.
And so, hey, Michael, just for everybody, Michael did some really cool drone work, photography around some castles in Germany. And if he doesn't mind, is it okay if I share with people your?
Yeah, sure.
Okay, I'll include that because it's really, if you like German castles and you like drones and you like photography, you'll love what Michael's put together. So, but let's get into our session. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Here's a little bit about the active trend trader. Remember, expectations must be confirmed by price action to prove valid. I truly believe that. Last week was a very good, week before last was a very profitable week for us in the active trend trading. This week has been, I was sharing with Michael a little bit earlier, it seems like I've been waiting for the bus this week. There has not been a lot of just really awesome signals, but at the same time, you know, sometimes we have weeks like that when the things we're watching just haven't given us just the right signal, and so we'll keep pressing onward. We are into the summer doldrum months. I want to thank Joe Schuster for sending me a article that talked about, you know, is it true to sell in May and go away? And the article that he forwarded, actually, you know, Michael, you'd find this interesting. It basically was stipulating, saying that the best time to actually kind of like be out of the market is actually towards the end of July through the mid to last part of, you know, for a 2-month period through September, which kind of makes sense because we've been talking about that for a while now, how August tends to be the most volatile month of the year, and September the worst performing month of the year. So but that old adage of sell in May and go away, maybe not so true. And so, go ahead, Michael.
Yeah, I think that's the point. And what you have to consider too, that if you look a couple of decades back, yeah, I think in September and October we had some awful crashes, and of course so it depends if you so maybe you shouldn't just add up the aggregated performance gains or losses.
Yeah,
but the number of months up or down.
Well, yeah. But David probably has the proper reason. He says if sell in May and go away rhymes, and so you can't really say sell in July and go away because it doesn't rhyme per se, and so or sell in August, and I can't think of anything to rhyme with that. So anyway, let's get into our review. Market review, then we'll take a look at some of the stocks and ETFs we're looking at. So here's where we finished the week. This is as of 9 o'clock this morning. That's Pacific time. I keep my, even though I'm now permanently living in Hawaii, I keep my my actual, you know, computer set to Pacific Coast time, just so I can be in, you know, kind of mixing my metaphors, if you will, so that I'm aware of what time it is on the mainland, and that's where I kind of gauge everything that I do with the active trend traders against the Pacific Coast time frame, not Hawaii time. As you can see, everything is up for the year nicely. NASDAQ and NASDAQ Composite up more than anything else. The active trend trading doing well. We had a couple over the last couple of weeks. We've had bang up times. Let's see. Michael just says it depends on whether you are trading the S&P 500, the NASDAQ. S&P 5 is better in May, while NASDAQ is better sold in June. This is from the Stock Traders Almanac. Thanks, Michael. I appreciate that information. So let's see what we've got going on here in the. Now, Mikey, you said you had been spending some of your time this year primarily trading, not so much the indexes, but trading trading the. Oh gosh, just slipped my mind.
Commodities and currencies.
There we go, currencies and commodities. And
well, not the number of trades, but it really paid off to make myself familiar with the little odds in this area.
Okay.
And the market was more predictable. So it was kind of a side range, and there were patterns.
And yeah, and one of the things that I really have enjoyed so far this year is that our choice to go into primarily trading the leveraged index ETFs and also 4 leveraged ETFs that emulated 2 commodities and then 2 the financials and the biotechs industry groups has really worked out well also. It basically, we don't have to spend a lot of time looking for good stocks that are going to basically do well, although we have found some of those. These 7 entities have provided ample opportunities to be trading throughout the year, so I like that. So S&P looks like it wants to turn over, however, has not yet. Let's not get ahead of ourselves. We can sit there and go, okay, we had a gap down. Often, that is a bearish signal on a daily chart, but as you can see, a gap back down and immediately tried to reverse back up. So we do have resistance up there in the 2477 level, and we have support down here at the 2453 level which it bounced off of on Tuesday of this week, but popped up, hanging man type of bearish reversal signal, a gap down with today's reversal. And on the intraday chart, or on the weekly chart, I would say just kind of a sideways move here. If we can't push any higher here, we would consider this kind of like a double top in these areas here on the weekly, and if it rolls back over, that would be interesting. One of the things that we've been highlighting and trading with over the last few months is the market forecast from Think or Swim TD Ameritrade. And what we have on a weekly chart is we basically, around the same time, we've gotten all 3 of the momentum lines in the upper reversal zone. That's called a 3-line cluster. We also had a day ago, same thing, 3-line cluster right as we hit this peak right here. And the way to interpret those is that typically when you get the cluster within somewhere between 2 to 5 trading periods, that tends to mark the either the high or the low, and a reversal could be expected. What might the reversal in the S&P look like? Well, for right now, let's just continue to concentrate on trading pullbacks into known support levels and then rebounds. Last pullback again was a couple of weeks ago. Pulled back into the 50, rebounded, and so it's done that several times on the S&P, and which corresponds to a pullback to the 8-period moving average on the weekly chart. So that's what's going on with the S&P. Not a time to get long, not a time necessarily to get short. If you're doing strategy 3, we may nibble on a little bit of selling some calls. However, we have to remember the technical trend is up. NDX very, very similar. NDX, we got a breakout and a retest of the breakout today at the 58.97 level. Again, hanging man, moving average, or the TSI on a weekly chart, kind of, trying to bend over momentum, trying to bend over, same thing. So, more noticeable negative divergence here on the true strength index and the momentum on a weekly chart. This is where we can actually take the weekly and have some fun with it. Just draw a trend line across here. And as long as that trend line isn't broken, the momentum is still basically draining off, and that can give us an indication that weakness may be come back in here. Even though price action is pushing to a higher level, eventually this lack of momentum will provide the inertia to at least pull us back into a pullback or into a pull back into a support level for a rebound. Where might support level be? Well, I like this pullback to the 58, 44, 45 level, which corresponds with the moving averages. Again, what's it going to do? It could just sit here at the 58.97 level and rebound here. When are we most interested in this? And we've gotten several of these throughout the year. If we go back just to 2016 on the TSI, is when we're getting these in the lower reversal zones or bouncing off a level of support in the indexes has turned out to be very good buying opportunities. So we're paying attention to this. What's happened when we're up here? Well, clearly it's not a buying opportunity, or not the best buying opportunity. But if we get a rollover, we'll just watch it, see how far we roll back down. And as of right now, the way we want to trade this, we want to trade it in. We'll trade the pullbacks, get ready for the pullbacks for a rebound higher. And so, Michael, anything on the NASDAQ or the on the S&P that you find interesting?
Well, on the NASDAQ, I wait a little bit, or I'm surprised when we get to 6,000. So maybe, like Amazon, no, Google was 1,000. Then there was another milestone. What was the other? Facebook? No.
Priceline.
Priceline, and the third one.
Yeah, Priceline is almost at 2,000.
Amazon was scratching or not? No.
There you go. Yeah.
No.
Well, here's Amazon. Amazon's just over 1,000.
Yeah, exactly. That was the third one. Yeah. So you would assume that NASDAQ 6,000 is around the corner.
Yep. And could very well be. And so, hey, let's take a real quick look at the Russell and what is going on, and then we'll get into some extra chart. Interesting. Okay, Russells. We had highlighted this little uptrending channel in the past, and the Russell today seems to be like reversing off. This is a good reversal signal. It went really high. It basically rallied up really high, but then the sellers came in and said, wait a second, now we're not going to let you do this breakout, and it's pushed us back down. Now, where might we go? Well, we could go all the way back down to the 1402 level, but we've got things turning over, so it makes it kind of interesting on the Russell. The weekly chart on the Russell still pushing up. A little bit of negative divergence still going on here, though. And as you can see, this was another one of those. 2 days ago, we get this bearish cluster on the market forecast with its momentum, which completed like yesterday. And today we get a rollover type candle. Now, I wouldn't be per se selling, this particular candle, although we could anticipate that we could get a move. Let me get my other chart up here. We could get a move that would basically take it back to the bottom of the channel. What type of a let's just take this as an indication, and then I'll move this, activate. Move that to here. And as you can see, that would, put it in the bottom. If we went down on the same type of trajectory, that would put it at the bottom of the channel somewhere around the week of August 7th. So I'm not going to say it's going to go there, but if we maintain symmetry with this move down, that's when it would be. And time of year wise, would not be surprising to see the the indexes either stabilize here, move sideways, and or drop down, because we do need the instability of both August and September and early October to get us set up for the trades we're anticipating for the rest of the year. Hey, Doug, how you doing, Dougie? Love the pictures of the camping trip, man. So let's see, S&P. Okay, back over here. Yeah, Michael, go ahead. Did you have anything?
No, I did not have any comments.
Okay, so what else are we looking at? Okay, LABU, we were in LABU earlier as of last week. It hit its trailing stops on the 17th, which was Monday this week. We got out with an average profit of about 4% or $784. Nugget, are we at the point where we can expect a seasonal move in Nugget? Big question mark there. NVDA, Tesla earning moves. This may provide some, upside potential up until earnings on each one of those. CGNX came on my radar earlier this week. It is doing well. Along with this, I want to throw in FEYE as also a potential stock to be watching, either pre-earnings, and I'll take a real quick look at both of those right now. As a matter of fact, we'll take a look at all three of those. So let's take a look at Tesla. Okay, as you can see, Tesla is basically working within a price range between the 333 and the 303. Has earnings coming up on 8/2. It tends to be the earning trades on Tesla tend to work best. Again, this is a tendency, getting into either a 40 delta option that expires the week of earnings, which would be August 4th, or just go ahead and buying some shares for the price action. Or for the pre-earnings move up. And with Tesla, sometimes you're looking at somewhere between a 5 to 10% move up prior to earnings. So that's what I'm looking at with Tesla. I can actually draw a little trend line across this bottom here. And if that's violated, if I get into a trade here and that's violated, I want to basically be gonzo. Or if I don't get in a trade here, but I want to use that as my bounce point, where if it gets down to, let's say on Monday, it gets down to 324. Okay, 324, I could utilize that as my line of demarcation for planning a trade to get into it. Like we're trying to do on, we showed that on Wednesday night on the NVDA. NVDA, again, earnings on NVDA after market on an 8/10. Again, it's one of those somewhere between 10 to 7 days, calendar days before earnings. We're going to be wanting to open a position on NVDA to anticipate a potential earnings run. And here's a daily run, and this gives you a picture of this as what we're talking about. Is here was earnings this day here. And you step back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So in this case, 14 days before earnings, that's 14 trading days, would have been a good time to get into a trade. On this particular one, if you would have waited till 10 days, it would have been kind of a flat trade. But you can go back. It's a good time to just go back and evaluate and assess. Here's an earning period here. Bam. Go back 10 days. And that's what I've done on a lot of these to say, okay, NVDA does a good job coming off of levels of support, doing a market run. Like here's a good example. Let's go back from market earnings. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So from there up till, a couple of days before earnings or the high of earnings, it ran up about 8.34%, which is great. But look at the change. It ran up also $9. And so that's where you can basically look at buying a call that would expire the week of earnings, but about a week and about 10 to 7 days before earnings, 40 delta on the call, 40 to somewhere between 40 and 30 delta. So it is an out of the money call position, and then letting implied volatility increase up until earnings, which they tend to do on these, high-powered growth stocks, and then make sure we get out of the position the day of earnings or the day prior to earnings, or set a target. Say, okay, if my option goes up 150%, get me out. And then you just float it out there, and if you hit the 150% level, you take a nice profit on the position. So, Michael, I've been studying these pre-market moves, utilizing strategy 2 on the options, and a lot of them have about a 70% win-loss ratio just during earnings, and tend to provide a really nice return. Are you doing any? Huh?
Yeah, I do, and my preferred strategy is an iron fly.
Okay.
Because I mean, the problem with earnings is that if you use kind of a safe strategy, like a naked put far off the money or something like that, most of the time it works very well.
Yes.
But the time when it does not work, it could really, really hurt you. I mean, take NVDA. I mean, on the next earning, it can go up to $20 or $30. So
yeah. Now you're holding through earnings, though, right?
Well, if I have longer term options, I do not really like to keep them around earnings.
Okay. So, yeah, I want to have my position totally closed before earnings. That way, there's no earnings surprises, and I'm basically taking my position on the known that implied volatility tends to always increase and sometimes totally blow up going into earnings. So,
I mean, what's almost a no-brainer is if you have anyway the position and the volatility is really high, that you do a covered call, or if you short a covered put.
Yeah. So here's another pre-earnings trade that I'm looking at, guys. It is basically CGNX. Earnings are coming up on the 31st after market close. It just has broken out. And we got to move along. It has just broken out from that little downtrend, and it's hit against the moving averages, and everything is getting in gear up to the upside. If it gets a pullback into the middle of this candle, which is about the $91 level, that would be a potential buy point, or go to the intraday chart and utilize, find the buy point there. And so that's one. And then FEYE. Interesting. FEYE. The reason that this one is of interest, one, you've got earnings coming up. It may set up, it may not set up. Earnings coming up 8-1 after market closed, and you've got a level of support down here about 15, a level of resistance up about just a little bit over 16. It could break through that, or we could go into a run, and from 15 up to 16 is about a 6% gain. And so this is another one where FEYE, FireEye, could provide a nice little pre-earnings bounce, either up to the Keltner channels or even up to the moving average envelope. So that's a couple of things. Now you know what I'm looking at for the week. Going forward, we talked about Tesla. We talked about NVDA. We talked about NVDA. Not at a buy point right now. And so what else we got going on? Okay, here's where we're sitting with the strategy 1, 2, and 3 for the year so far. We did a really good training on Wednesday night about how to fill up each one of the strategies, and also to help premium members understand you don't have to be investing in each one of the strategies. Just choose one that you want to trade, or choose a couple that you want to trade, and then focus on those. We send out text alerts on, every time I enter a trade on any of these, a text alert goes out, and then an email alert goes out shortly after that. That has the rest of fills in the rest of the blanks for the order, so that you can put in, so that where I'm going to put in my stop loss. That way you can have your conditional orders all set and ready to go. Highlight this really quick. Here's the seasonality in S&P, and as you can see, S&P, the pink line is the average year. The blue line is the post-election year. You have seen this before, but the S&P can tend to rally or move up until the end of July. We're approaching the end of July. Then on a regular, just average, this is 59-year average. S&P, what does it tend to? Does it go down dramatically? No, it tends to drive sideways. It may drop a percentage or so until the October timeframe, and then towards the end of October, it gets geared up for its end-of-year move that lasts for about, November, December. This is where part of the adage is of the majority of big market moves happen between November and April, and when the market tends to go flat. I mean, that's just the buying habit and the personality of the entity. Well, what corresponds to that, of course, is the S&P's getting ready to go down. Well, gold basically tends to hit a low in the July timeframe and then rally up until the first part of October. That's what we are currently waiting for premium members, and we'll get those alerts out when it's time. So, Michael, that's it for today. Sorry I went a little bit over, folks. Again, keep those videos coming on the castles in Germany, and thanks for being online. And everybody who joined us today, the recording will be up a little bit later today. Good day from Palm Desert. All right. Selling in July could be a lie. Okay.
Okay. Thanks, Dennis. Bye.
Okay. Thanks, Michael. God bless everybody. And if you're a premium member, remember we have final hour coming up here shortly. So until then, until Monday, aloha. Trade wisely and profitably. God bless everybody.